Let's talk about putting insurance on your key employees for your business. Now, this is where the concept of becoming your own banker just becomes so efficient to couple it with you as the business owner. You see, your capital has to reside somewhere, and most of us just leave that revenue, that capital, over here at the bank because it's liquid and safe in case we need it. But at this point, you obviously know how much more efficient it is to put it in your own banking system where you get all of these benefits right here. The privacy, the liquidity, the protection, the higher savings rate, the flexible loan provision, the uninterrupted growth, the passive income stream for later life, and the tax-free transfer of wealth. So we're going to hit on a few of these right now as it pertains to your business. So your business most likely has individuals that are very important to you. And so one of the ways that you can use your dollars to accomplish multiple things is to buy key man insurance on them. And so let's assume these two down here are your key employees. Now, like I said at the beginning, your business capital has to reside somewhere. The reason we like putting it into the policy is because it helps you stay capitalized as a business. It helps you keep more control of your money. It offers you more certainty because of the guarantees, and it creates cash flow for you long term. So when we shift some of our savings, you still get to access and control all of this as the business owner, but now you also get an additional benefit, which is providing insurance on these key employees in case something were to happen. Now, this is somewhat of a rare circumstance, but it doesn't mean that we shouldn't prepare for it. And so by shifting your mindset and putting policies on some of your key employees, you get to accomplish multiple things by just changing this one paradigm shift. And so let's hop over to the Truth Concepts calculators and let's kind of take a look at what $10,000 a year on each key employee would get you as far as a private banking system, but also insurance on the individuals. All right, we've got a funding illustration calculator pulled up, and we're going to be looking at a 40-year time period. And let's say these key employees are 35 years old. So we're going to put in $10,000 a year into these key man policies. Now, remember, this is where your business capital has to reside. You can leave it in a bank or you can leave it in a policy. I choose to put it here because long-term it's a much better option for me. And so let's assume we start this policy in the first year. Now, we know we only get to access a portion of that cash, so about $5,800 the first year. But now we have $356,000 of insurance on that key individual. And so as they stay with us and they're working and they're providing a lot of value to our business, this account that we have on them is starting to, create some cash value increase each year, which you as the business owner would see this as a cash flow increase. You have more money available than what you're putting in each year. In this case, in year 5, every time you put in $1, it's earning more than $1, which is great for your sitting capital that you need to operate your business. Or maybe this is your emergency account for the business. But the point is now it's doing multiple things for us. So it's increasing in value just like we know it does because this is the world's greatest savings account. But the amount of insurance that it's purchasing on that key employee is going up every single year. So if they were to pass away in any one of these years, this is what the business is going to recoup for that. Now, one of the ways that I've structured mine for our key people is I told them if something happens to you while you're here, half of this death benefit I'm going to transfer to your beneficiary of organizations. And so ultimately you can make that decision at the business owner, but be thinking about how you can do multiple things with the same dollar. So in this case, we're increasing our savings rate. We've offered more privacy, more control. It's creating cash flow for us long term. There's a death benefit that's on a key individual in case something were to happen to them. We are protected on many, many different levels just by implementing this one practice.